This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. The average price of U.S. retail gasoline fell below $4 per gallon on Thursday for the first time in months, giving some relief to drivers in the world's largest consumer of the fuel. The national average price for regular unleaded gas fell to $3.990 a gallon on August 11, according to the American Automobile Association. Gasoline prices peaked at a record $5.02 in June. That high cost curbed spending, and prices have also dropped as market fears of severe restrictions on supply have ebbed since Russia first invaded Ukraine in February. Gasoline prices tend to peak in the summer. They usually drop as summer driving season ends around Labor Day, but that is not until September 5.
Sweltering summer temperatures and soaring gas prices have boosted the use of oil in power generation, the International Energy Agency, IEA, said on Thursday, increasing demand but masking weakness in economies beset by recession fears. Natural gas and electricity prices have soared to new records, incentivizing gas-to-oil switching in some countries, the Paris-based agency said in its monthly oil report, in which it raised its outlook for 2022 demand by 380,000 barrels per day, BPD. These extraordinary gains, overwhelmingly concentrated in the Middle East and Europe, mask relative weakness in other sectors, the IEA warned.
Moving on to the top news in the energy sector.
Physical oil prices around the world have begun to sag alongside futures, reflecting less alarm over Russian-led supply disruptions along with heightened worries about a possible global economic slowdown. The market is very bearish at this moment. No one is in a hurry to buy, a Singapore-based trader said. Lower than usual U.S. gasoline demand during peak summer driving season and contracting factory activity in China indicate that high prices cut consumption in the world's top oil consumers, analysts and traders said. That is a stark contrast from last month, when physical market activity suggested buyers were more worried about securing supplies.
Oil prices rose by over 1% on Thursday after the International Energy Agency raised its oil demand growth forecast for this year as soaring gas prices drive some consumers to switch to oil. Brent crude futures gained $1.04, or 1.1%, to $98.44 a barrel by 0949 GMT, while U.S. West Texas Intermediate crude futures rose $1.03, or 1.1%, to $92.96. Natural gas and electricity prices have soared to new records, incentivizing gas-to-oil switching in some countries, the Paris-based agency said in its monthly oil report, in which it raised its outlook for 2022 demand by 380,000 barrels per day, BPD.
Next, we have the top news in metal markets.
China's copper cathode output in July rose slightly from prior month, state-backed research house Antaike said late Wednesday, as production in some key regions started to pick up after maintenance shutdowns. Production at 22 smelters surveyed by Antaike, accounting for 83% of China's total capacity, was at 790,100 tons last month, up 1.7% from 777,000 tons seen in June. Smelters in the eastern Shandong province, northwestern region Xinjiang and northern region Inner Mongolia's Chifeng city ramped up the production, while output in some areas, such as north-central Gansu province and southern region Guangxi, remained affected by maintenance shutdowns.
Gold prices edged lower on Thursday from last session's one-month peak, weighed down by hawkish policy remarks by U.S. Federal Reserve officials even as data pointed to signs of inflation peaking. Spot gold fell 0.3% to $1,786.71 per ounce by 0852 GMT, after hitting its highest since July 5 at $1,807.79 on Wednesday. U.S. gold futures slipped 0.6% to $1,802.30. Gold has struggled to make significant headway despite the correction in both the U.S. dollar index and the easing in the 10-year U.S. Treasury bond yield, said independent analyst Ross Norman. We will now look at the top news in the agricultural sector. Severe drought is set to slash the European Union's maize harvest by 10 million tons, dropping it to a 15-year low of 55.4 million tons, consultancy Strategie Grains said in its monthly forecast on Thursday. The forecast marked a 15% cut to its July estimate of 65.4 million tons for 2022-23 EU maize, corn, production. Crop forecasters have been slashing their outlooks for the EU maize harvest as worsening drought and successive heatwaves in major producing countries such as France, Romania and Hungary have strained maize plants during their crucial summer growth period.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.